let's look at a low beta ETF. First off, read this disclaimer carefully. The ETF is here under specific strategies, and it is the low beta stock portfolio ETF. 25% here from the low and pretty close here to the 52-week highs. So let's look at it in more detail. This is the big picture weekly data points, and pretty clearly it's been in an uptrend. So it went public here around 2011 when we had, this, more or less, a recovery from the global financial crisis. We have a new, I think this is a new all-time high, or pretty close. So yeah, the bulls are in control. When we look here at, these signals. So RSI, distance from the 20-week moving average, 50-week moving average, 100-week, and the 200-week moving average, we have extreme readings on these indicators. So throughout the history of this ETF, it is very rare for us to be this far away from these moving averages. So yeah, bulls have been very ferocious. Extreme reading here also on MACD. And then it's important to look at the history. What is the tendency to happen when we have very high readings? You usually see that there's some pullback. The most bullish thing I do see here is the accumulation distribution that shows that there are active buyers here in a big way. When we go here to the daily data points, so looking here at, distance between price and the 200-day moving average, 100-day, 50-day, and the 20-day moving average, we do have some relatively high readings, though it's not as extreme as what we saw on the weekly data points. So based on the technical signals I see here, I think that you could make a pretty strong case that it's been a very strong move to the upside. So are the bulls in control or not? Clearly the bulls are in control. But that's not the point. The point is, what is the most probable future development? Because that is the point of, being in the market. You are either bullish or bearish on some security. And the only thing that matters to you is what is the most likely future price direction. I think that you could make a very strong case looking at the weekly data points and literally all the data we have here. It is pretty darn clear that in previous times where we have had similarly, excessive readings on these, especially look here at, the PPO, we usually see some pullback. Like here as an example, we have high PPO, high, the 20-week PPO, 50-week, 100-week, and the 200-week were high. We did see a pullback. In this instance as well, we did get a pullback. Here, we did get a pullback. So that has been, the primary future development when we have those signals that are eerily similar to what we have right here and right now. Looking here at the seasonality, clear weakening from August to October over the last 5 years. Over the last 11 years, from July to September, there's a clear weakening, in the seasonality. So that is more favorable to the bears. Looking here at Finviz, we have these trend lines. I'm not a huge fan of diagonal trend lines because the way you draw them can be very arbitrary. So you can get, false signals, but these are the trend lines we do have. When we compare the SPLV, which is, the low volatility ETF, to the S&P 500 ETF, the SPY, then we do see that the beta is lower on the SPLV, 0.7 versus 0.99. Ideally, maybe, the beta should be even lower. So it is a lower volatility ETF, but it's not like that low. If I were to design, a low volatility ETF, I would want, the beta to be like average beta to be below 0.5 or something, you know, to have like a significant difference. But yeah, that's the beta we have in this case. The dividend 1.63%, so it's an okay dividend, but it's not a reason to hold on, versus 1.23 here for the S&P 500. Looking at, you know, the 5-day volatility difference, you do see that there's a pretty substantial difference. Though looking at, you know, the 200-day volatility, the 50-day, and the 20-day, the difference isn't that tremendous. So if I were to sum up my take here for this ETF, I think that, you know, the technical signals and the seasonality, they strongly suggest that given the current situation, which is the only thing that really matters, the history is pretty darn clear. There is a strong tendency for there to be a pullback when we have these readings. Could the readings get even more extreme, you know, especially in terms of, you know, the weekly data points? Could we like set a bunch of new records? It's possible, of course. But if you look at the times where, you know, the PPO were more extreme on the 20, 50, and 100 and the 200-week data points, that's when you had, you know, the biggest corrections. So yeah, the risk for bulls at this level is higher than the risk for bears.